Chapter 3 Problems. So problem 3-1A, on March 31st, the following data were accumulated to assist the accountant in preparing the adjusting entries for Potomac Realty. So we have a number of entries here, 5. And the first one is the supplies account on March 31st is $5,620. Supplies on hand are $1,290. So all of these are going to be on March 31. So the first one is going to be supplies expense, and the credit is going to be to supplies. And the amount is going to be the $5,620 minus the $1,290. So $4,330 is our adjustment. So this is a deferred expense. The cash changed hands when we bought the supplies, and now we are accounting for it. The unearned rent account balance on March 31st is $5,000, representing the receipt of an advance payment on March 1st of 4 months rent from tenants. So our debit here is going to be unearned rent, which is a liability. That's going to reduce that liability, and then rent revenue. So this is a deferred revenue. We received the cash back on the 1st of March, and so the amount is going to be $5,000 divided by the 4 months rent that it represents. Wages accrued but not paid on March 31st are $2,290. So here is an example of an accrued expense. So wages, expense, and then wages payable. And it gives us the amount of $2,290. Fees accrued but unbilled at March 31st are $16,825. So this is accounts receivable and fees earned. And it gives us $16,825 as the amount. And then lastly, depreciation of office equipment is $4,600. Depreciation expense, office equipment, and this contra asset account accumulated depreciation for office equipment, $4,600. And that is the entries for problem 1. And in all cases, post this file under the new recordings folder in chapter 3. And the problem is on the instructions are on the first tab, and then the solution is here on the second tab. So the problem for the second, problem 3-2A, is here. And the solution is going to be on this one, it says selected account balances before adjustment for Atlantic Coast Realty at July 31st. The end of the current year are as follows. So this date is July 31st. The first one is unbilled fees at July 31st should be $11,150. But if you look at the liability account, unearned fees, it has 12,000 as the balance. So this is unbilled, so this is accounts receivable. They have not been billed yet, and fees earned. And it gives us the amount at $11,150. Second one, supplies on hand at July 31st are $900. Supplies, expense, and supplies. The balance in the supplies account is $3,350, and we have $900 left in that account for a required adjustment of $2,450. Rent expired is $6,000, so this is rent expense and prepaid rent is the reduction of the asset. So $6,000. Depreciation of equipment. Depreciation expense is the debit. And the credit is the contra asset account, accumulated depreciation. Unearned fees at July 31st, $2,000. So we're going to reduce the liability and take the revenue. So we had a balance in that account of $12,000. And it should be $2,000, giving us an adjustment of $10. And then lastly, wages accrued. Wages expense and wages payable of $48.40. So in each case, there's always one balance sheet account and one income statement account. So for the accrued revenue, the first one, the balance sheet account is the accounts receivable. The income statement is fees earned. The deferred expense is supplies expense. That's the income statement account. And supplies is the balance sheet account. For the another deferred expense, rent expense, is the income statement. Prepaid rent is the balance sheet. The third deferred expense is depreciation expense, less the accumulated depreciation on the income statement, the balance sheet account. Unearned fees is the balance sheet account for the fifth adjustment, and fees earned is the income statement account. And this is a deferred revenue. And then lastly, the accrued revenue of wages expense is the income statement, and wages payable is the balance sheet. And then the last entry that I'm going to do is problem 3-3A. Trident Repair and Services, an electronics repair store, prepared the following unadjusted trial balance at the end of its first year of operations. And it gives us a balance sheet, the assets, the liabilities, 2 of them, 2 stockholders' equity, 3 stockholders' equity with dividends, the revenue, and then 4 expenses. And then it also has 5 entries that need to be made. So this is all on November 30. So the first one is fees earned but unbilled. So once again, accounts receivable and fees earned. The amount is $7,000. So an accrued revenue. Supplies on hand were $1,300. So supplies expense is the income statement, and supplies, which had a balance of $16,200, and we have $1,300 left. So the required adjustment is $14,900. Depreciation on equipment. Depreciation expense is the income statement. And accumulated depreciation on the equipment. $7,200 is the entry. The balance in unearned fees represented the November 1 receipt in advance for services to be provided. $13,500 were provided during the month of November. So this is a reduction in unearned fees and fees earned. And it tells us the amount, $13,500. And then lastly, unpaid wages. Wages expense is the income statement, and wages payable of $4,800. And those are the 3 problems. So I hope this helps. And if you've got any questions, let me know.